Hinduja Global Solutions Limited Q2 and H1 FY23 earnings conference call. From the senior management, we have with us today Mr. Partha Sarkar, Executive Director and Group CEO, Mr. Srinivas Palakodeti, Global CFO, and Mr. Winsley Fernandez, Whole-Time Director. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Shah from Act Factors PR, Investor Relations Team. Thank you, and over to you, sir.
Thank you, Faizan. Good evening, everyone, and very warm welcome to Q2 and H1 FY23 results conference call of Hinduja Global Solutions Limited. We are joined with Mr. Partha Sarkar, Executive Director and Group CEO, Mr. Srinivas Palakodeti, Global CFO, and Mr. Winsley Fernandez, Whole-Time Director, to discuss our Q2 and H1 FY23 results and key developments during the period. Before we begin the conference call, I would like to mention that some of the statements made in today's conference call may be forward-looking in nature and may involve risks and uncertainties, including those related to the future financials and operating performances, benefits and synergies to the company's strategies, future opportunities and growth of the markets of the company services and solutions. I would further like to mention, if there are any call drops during the course of conference call, please bear with us. Thank you, and over to you, Partha sir.
Thank you, Rishabh, and a very good evening to all of you who've taken the time to join us for the call. At the very outset, I would like to invite Winsley Fernandez to this call, who is joining us in the earnings call for the first time, post our merger with Next Digital. So welcome, Vince.
Thank you very much.
I will be referring to a presentation which I believe has been uploaded on our website, which talks about our earnings call. And if you go to slide 1, that kind of lays down the future vision, future roadmap for HGS as a company, a different kind of a company, which is technology-led, which is becoming a digital-led customer experience transformation company. It talks about a revolution over the last 2 decades from being a pure labor arbitrage provider to somebody who brings in technology and adds value. So there are 5 distinct pillars that would lead our transformation. We would be attempting our journey, broadening our journey in the digital marketing piece. We've always been strong in process management and technology. We are bringing in capabilities in data and analytics, e-commerce, payments, and all of that. So all these 5 pillars will drive our journey into a digitally led customer experience transformation company. This is the future of HGS, and we are building components of it and strengthening other components which are already traditionally there. If you go to the next slide, I want to give you a quick update on the Next Digital Media business and the buyback plan. The Honorable NCLT order for the merger of the Next Digital Limited's NDL Media business into HGS was received on 11th of November 2022. 1.0689 crores of shares were allotted to NDL shareholders based on the swap ratio as on November 25th, 2022. New shares allotted are expected to be listed by December 6, 2022. The share capital of HGS has increased from rupees 41.79 crores to rupees 52.48 crores as a result of this exercise. The NDL shareholders would own 20.4% of the shares of HGS, and the promoters holding in HGS would drop from 67.13% to 66.63% after this. Another update on the eagerly awaited buyback plan, which we had announced in January of 2022. The update is that we are coming very close to it. It will be taken up after the completion of the listing of the shares to the NDL shareholders, and the amount earmarked for buyback is around rupees 1,050 crores. And the reason I'm talking about this in approximate numbers is because this will be done post a complete audit of the combined balance sheets of the company. So that is a fairly important update to matters of interest to all of you on this call. Today, as I welcome the Vince into the call, we are a combined entity. I am on slide 5, HGS and Next Digital together, bringing in technology for the future, technology of connectivity, technology of process improvement, automation, analytics, and artificial intelligence. Slide 6 talks about the key brands which become a part of HGS, In Digital, One Entertainment, IME, and Next Digital. The merger boosts HGS's presence in India, adding about 1,200 people of the Next Digital team and India-originated revenue. We suddenly have a massive reach all over the country with 1,500 cities coming into the part of the network. The franchisee base, we have 10,000 franchisees who are a part of the family now, and digital service partners delivering digital services to more than 5 million customers. So this is a transformative leap for HGS as a company. What are the synergies and what are the opportunities here? Huge opportunities to participate in the government's Digital India initiative. As you all know, COVID has accelerated work from home, and there are changing trends in digital content consumption. The possibilities are really limitless. We have to make India digital, not just the tier 1 cities, which already have very good infrastructure, but we need to be able to connect the hinterland of India. Tier 2 and tier 3 cities who are huge consumers, but do not really have the digital access that enables them. And that is what this aims to do. We will create a global telecom and media ecosystem to serve B2B and B2C segments. As you all know, that even before the merger, technology and telecom was a large part of our global footprint. And our attempt would be to take some of the things that we acquire as a part of this merger to our global clients going forward. I am now going to hand over to Vince to take you through the digital media business and its Q2 highlights before I come back again to give you the highlights of the combined business. Over to you, Vince.
Thank you, Partho, and on behalf of all of us at Next Digital, a big thank you to the HGS family, Team HGS, for welcoming us into the fold. I think there's nothing but exciting times ahead, and we all look forward to that under the guidance of the team. So I won't, without further ado, I'll go straight to, I think Partho has been able to talk about the brands, but if you look at slide 9, I thought I'll just recap for the benefit of everyone. There are 4 key brands that are there in the business. We have India's only head-end in the sky platform called Next Digital Hits. That platform, in fact, is one of the few platforms in the country to be able to have a spread of over 4,500 PIN codes today. I mean, we're in Andaman and Nicobar Islands, Lakshadweep. We're very proudly serving in Arunachal Pradesh, on the borders in Ladakh, Wagah borders, Jammu and Kashmir. So there's a lot of pride in the brand as well. Our broadband business, One OTT Entertainment, is one of India's top 4 private ISPs. We've crossed over 1 million customers. Today, our presence, in fact, has expanded to just under 200 actually cities and towns. And we provide speeds of about 1,000 Mbps, which is 1 Gbps fiber connectivity through our flagship brand, 1 Gigafiber. We also have a digital cable business that we have nurtured ever since several decades, actually. And the reason why we continue to nurture it is that there is a backbone of over 10,000 kilometers of hybrid fiber optic networks. So we look to leverage that and continuously monetize that for rolling out a whole bunch of solutions under the Digital India initiative. We also have In Entertainment Limited. in entertainment effectively works a lot on content syndication and teleshopping. And if you look at the map to the right of it, that just gives you a sense of the incredible presence that Next Digital and the brands have been able to achieve. Rather than labor too much on Next Digital as a background, I thought it important to share some developments in Q2. And one of the things on slide, if you move to slide 10, is that we are very proudly, we've launched India's first convergent product. Everyone talks about convergence. Everyone talks about how the importance of convergence going forward, especially about during work from home and after. We're the first people just in Diwali, across Diwali actually, to launch it. And it's an incredible product which has 6 products attached to the solution, starting with digital television, about 650 television channels, 1000 Mbps of broadband connectivity, access to the best international, national and regional OTT content of over 300,000 hours. We also have a voice over IP solution linked to it, the intercom solution. There's building Wi-Fi and of course bespoke CCTV solutions. As you would understand and appreciate, all these digital products require a very, very strong customer experience and customer backbone, as well as obviously analytics and a whole bunch of automation involved there. And that is what gives us the edge by virtue of being a part of Team HGS. So we're very, for us, the backbone is complete for us. We started this service in Mumbai as phase 1, and we're looking to extend this to the other key cities in early 2023. It's important to note it's not just a product or a solution that we've launched. We're also making every effort to improve the skill sets of the franchisees. We've got over 10,000 franchisees, as Partho pointed out, and totally about 40,000 feet on the street. So the idea is to train them on products and solutions for the future. And we've launched this campaign called Next Sangram, where we're training operators across the country to metamorphosize into digital solutions or digital service providers to offer all these offerings. So that has already started. That was one aspect, but I think the best part about what we've just done is on slide 11. We are the first broadband over satellite commercial operator. We launched our bundle solutions in terms of bundled solutions, of course. We partnered with Tata Study for education and Jadus for digital direct cinema. Now, this is the future. If you look at the top 5 technology trends for the next decade, one of the top 3 is broadband over satellite. As you all know, there are so many companies globally, leaders who are looking to launch broadband over satellite. And clearly, India is a very, very important market. And as Next Digital, we're very, very delighted that we've been able to launch a product called Next Sky-Fi. And it's not just a retail model, but also a very innovative enterprise model, where if you look at the photograph on your screen, it's incredible that we've started education, a hybrid model of education, using a cinema in the daytime for classes, and then using the cinema, obviously, for direct digital cinema experience in the evening. So this is something that we're very proud about. And the best part is, given our franchisee network and our entire base, we're able to not just sell, but also service and support any kind of requirements across this vast country of ours. We've already launched in Tawang, in Arunachal Pradesh, and in Pulwama and Jammu and Kashmir. We chose these 2 regions and these 2 locations specifically because they have poor connectivity, and the solution is already working beautifully there. We're also very proud that on the enterprise side, which is where there is significant growth that obviously the industry will see, we've already been able to sign up a solar farm in Ahmednagar recently, and we're providing 24/7 remote sensor management there. So this is something that we believe will be the future for the country. It's part, as Partho pointed out, the part of the Digital India initiative of how to bring digitalization and digital inclusion to every single citizen across the country. And one of the key drivers is connectivity. And when you use broadband over satellite, there is no constraint on connectivity, because irrespective of where you are, a satellite will always reach you. So we're very proud to have launched that. I'll move on to slide 12. This is a reflection of the strength and the stability of the media business. If you look at it, and I'm sure that a lot of you will know the challenging trends that the industry has faced, in particular the media and entertainment industry, and yet Next Digital and the media business has been able to kind of hold its pace strongly. In fact, we've seen a marginal growth against quarter of last year. So on slide 12, if you look at it, the subscriber base of video has grown to about 4.18 million. But I think the most exciting thing for us has been the continuous push of broadband, where we've been able to grow our broadband subscriber base to 1.15 million, making us the fourth largest private ISP in the country today. 90-day net churn, which we believe is a very important barometer of the strength of a company, we've been able to control it much better than last year, which is reflected in the 1.9% 90-day net churn that we had. And the same month renewal again, which is when customers renew their subscription, whether it be video or broadband. This is, of course, in the case of video. We've been able to hold 90.16. That means 9 customers out of every 10 renew their subscription in the same month and don't wait for any kind of lag time to renew. So this is a wonderful aspect. With that, thank you again on behalf of Next Digital for hearing me out patiently, and thank you, Partho, for the opportunity for all of us to be a part of Team HGS. With that, Partho, I'm going to hand back over to you. Thank you.
Thank you, Vince. So with this exciting story that Vince laid out from us, you will be convinced that the future of HGS is all digital. And for the first time in quarter 2, I'm on slide 14, we are going to report the combined results of BPM and digital media businesses. We had a strong consolidated revenue growth of 25% year on year, 34.4% revenue growth in the core BPM business. Consolidated net profit was rupees 238.9 crores, up 118.1%. We announced a second interim dividend of rupees 5 per share to our shareholders. The dividend outgo would be to the tune of 26.2 crores. The BPM business added 2 new delivery hubs, one in Mysuru in India and another one is in Belfast in the UK. The digital media business launched 100 owned and operated Next Hub and continues to be the growth driver for broadband digital television and OTT solutions. We'll move to slide 15, key highlights of financial performance. Q2 for the BPM business only, 1,102.9 crores, EBITDA of 224 crores, and a PBT of 170.2 crores. Impressive growth in all the 3 reporting numbers. The EBITDA here includes the other income part of the business as well. Now, if you were to talk about the overall combined financials with the digital media business, then we've got 1,369 crores of revenues at 25% growth that I spoke about, and EBITDA of 276 crores, 135.6% growth, a PBT of 123.4 crores, and a PAT, which is reported in 2 formats, PAT of our continuing operations of 192.3 crores and PAT overall of 239 crores, which has grown by 118.1%, which I mentioned in the headline numbers. We'll go to slide 17. This is for the first half year. For the BPM business only, 2,147.4 crores in revenue, which is 30.3% growth, 395.6 crores in EBITDA, which is 179% growth, and an H1 FY23 of 288.4 crores in PBT, which is a 1423.1% growth. So all these numbers are for the HGS retail business, comprising of digital-enabled customer experience solutions and HRO payroll businesses. If I combine that with the digital media business, that's in slide 18, 2,690 crore of revenues, 23% growth over last year's H1, 499.6 crores is the EBITDA, which is 104.2% growth over last year. PBT of 200.3, PAT for continuing operations of 227 crores, and an overall PAT of 273.2, which is a 35.6% growth in numbers compared to last year H1. Overall, performance of the CS business is strong. Onshore US, Canada, and UK saw a steady growth. We added about 854 employees in UK in Q2. India, Philippines, and Jamaica showed very strong growth, and thankfully this is our higher margin offshore businesses, especially from existing customers. I talked about 2 new centers. We are rationalizing a real estate footprint, closed down 4 centers in Canada which are not being used because most people are working from home. I'm also encouraged to share with you that we started up a small center in Colombia in a city called Barranquilla. That's going to be our 9th country that we start operations in. And that is meant for nearshore operations for North American clients. Diversify, our Australian unit continues to do well and has won 9 new logos since April 2022. Digital Solutions business continues its strong momentum. Its revenues grew by 63% year-on-year. Cloud, security, and digital experience practices have expanded significantly. In September, we signed a 28 digital-led engagement across existing and new clients, and the pipeline looks healthy. The most exciting thing is our proprietary CX transformation platform, AgentX, has been rolled out. It's AI-powered, it's cloud contact software, and it's witnessing interest from several clients as we speak. Looking ahead, we've seen a good performance in H1, cautiously optimistic for H2. There are some headwinds in certain segments like the UK public sector. The demand for offshoring business is very, very strong, which is encouraging. We are continuing efforts to improve margin, focusing on winning new clients through an integrated strategy, which is digital and traditional brick-and-mortar businesses together. We continue to explore our acquisitions to strengthen digital capabilities and geographic expansion. The digital media business, our aim is to integrate and drive synergy with people, technology, and domain. And we are scheduled to roll out NextPlay, a content aggregator app shortly, providing access to international and regional clients. With this, I'm going to hand over to Pala for a financial update of our results for quarter 2. Over to you, Pala.
Thank you. Thank you, Partha. Thank you, Vince. I hope you are able to hear me. I am on slide 23. This is the performance of the HGS BPM plus digital media business. On a year-on-year growth in dollar terms, revenues are up by about 15.3%. Revenue from operations is up 9.5%, and total revenue is up overall 25%. On a year-on-year basis, EBITDA is up 135.6%. If you look at the depreciation and amortization lines, those have increased primarily because of India as well as the addition of the business from Next Digital. Interest expense has seen a reduction, and there's a significant portion of interest which is linked to India's accounting. At a PBT level, for the quarter ended September 21, there was a loss of 32.4 crores after factoring into account exceptional item of 24.8 crores. In the current quarter ended September 22, that the profits which we have reported is 123.4 crores. Tax, there is a negative line of 68.9 crores. This is primarily because of we have reassessed the tax of the HGS plus in Next Digital Media business, and we have reversed a 92.76 crores pertaining to tax of the previous business, leaving us 192.3 crores as profit from the continuing operations. as compared to a loss of 18.6 crores. In addition to that, we have the profit after tax from the discontinued operations. As you know, we sold off the healthcare business. There were some working capital adjustments, and so that crystallized during the quarter ended September 22. In addition to that, there were some excess tax provisions relating to the healthcare business, which have been trued up, and so there was a tax reversal. So giving us a net 46.7 crores as profit from discontinued operations, leaving a total PAT, profit after tax, of 239 crores. Moving to slide 24, this is the view on the first half of the year, 6 months ending September 22. On a revenue basis, revenues are up by about 14.9% in dollar terms, and in rupee terms, revenues are up by about 23%. EBITDA is significantly higher at by about 104%, so a little more than double. Depreciation has seen an increase, whereas interest expense, there is a reduction of about 4 crores. At a PBT level, we have profit PBT of 200.3 crores compared to a loss of 54 crores in the first half of the previous financial year. PAT from continuing operations, after taking into account the tax going up, comes to 227 crores as compared to a loss of 36.4 crores. And PAT from discontinued operations, what I covered earlier, that comes to 46.2 crores. 237.9 the prior period pertains to the profits from the healthcare business, which we had till Jan 2022. So the overall level, profit after tax came in for the half of the year at 273.2 crores as compared to a profit after tax of 201.5 crores in H1 of the previous financial year. Moving on to slide 25, this is on the balance sheet. It continues to be strong, and this includes the digital media business acquired. The shareholders' funds stand at 8,600 crores. We have a book value of per share of 1,639 rupees per share. Current price is roughly about 1,253 rupees per share. As mentioned earlier, we have declared an interim dividend, second interim dividend of 5 rupees per share. At the overall gross debt level, we have 638.5 crores. This has come primarily from the NDL media business, and we have total cash and cash equivalents of about 2,311 crores, leaving a net cash of 1,672 crores. Moving on to slide 26, this is the position. We have debt of 639 crores. We have treasury surplus in the form of short-term loans given. That comes to 2,575 crores. We have cash and cash equivalents, as I mentioned on the earlier slide, of 2,311 crores. And we have debt investments of about 2,645 crores. Moving on to the capex numbers. The numbers for first FY22, that also includes the capex for the healthcare business, whereas the capex for the first half of the year, FY23, includes the capex of the incurred for the media business. So that has come down from terms of capex from 237 crores to 97 crores. In terms of DSO days, there is a small increase. FY22 again is for the health overall business, and that has gone up slightly from 60 days to 64 days at the end of September. Moving on to slide 28, it's basically the split of the revenues. About 67% or 92.3 crores come from the BPM business. About 245 crores or 18% comes from the digital media business, and 15% came in from the other income. Moving on to slide 29. Here you would see significant changes compared to the way we have reported numbers earlier. This includes revenues from the India business, where the origination and the delivery all happens in India. So if you look at Q1, the India business would have been somewhere in the range of about 12 to 13%. That has gone to about 28% in terms of origination and about 31% in terms of delivery. In terms of other geographies, UK is about 18% by location and 22% by origination. Canada is in the range of 13 to 14% both by delivery and location. And US, we have 31% revenue by origination and about 24% in terms of delivery. Jamaica is about 5% in terms of our delivery location. Moving on to slide 30, this is the revenue split by vertical, and again this includes the revenues which have come from the digital media business. If you see that, if you look at our Q1 numbers, the media and entertainment business was about 13%. Now with the next digital media business, that comes to about 32%. So that's the big change you would see compared to what we have reported in the previous quarters. And if you add what Partha I mentioned in terms of technology and telecom, now media, entertainment, technology, telecom, those would account for roughly about 43% of our revenue. Banking and financials are 15%, consumer retail also 15%. Others include revenues from public sector clients, primarily in UK and Canada. As Vince mentioned, the digital media business has 4 million plus of digital video customers, 1 million plus of broadband. This chart is primarily on the BPM business, since we can't factor those kind of impacts of that into the revenue profile. So from a client concentration perspective, the top client accounts for about close to 10%, top 5 at 38%, and top 10 at about 58%. And from a delivery channel mix perspective, again this is for the BPM business, voice accounts for about 73%. Digital, which has been growing rapidly, is now at 14%, and it's actually now as far as marginally higher than the non-voice business at about 13%. Moving on to slide 32, this is the stock price. Last stock price Friday was about 12.53. Compared to the CNX IT, which has dropped about 18.6%, the share price of HGS has dropped by 8.6%. This does factor into the 1:1 bonus when the share went X bonus in February of 22, 22nd February 22. Whereas the Nifty 50, the share price has gone up about 1.7% over the last 12 months. With this, I will conclude our presentation, and we will now open up the floor for question and answers. Thank you, everyone.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, Anyone who wishes to ask a question may press star and one at this time. The first question is from the line of Jyoti Singh from Arihant Capital Markets. Please go ahead.
Yeah, thank you for the opportunity. My question is, I need some clarity on our BPM business organic growth side. And second question about the tax, that are those tax write back because of media business or because as per the results it seems like acquisition was made just to get the tax set off? Thank you.
Sorry, what was the first part of the question? This is Pala here.
First part of the question is, I think, answered in slide 15. So, Jyoti, have you looked at slide 15?
Yes, sir.
Yeah, so there the revenue growth is shown to be 34.4%. That's the pure BPM business for quarter two.
Okay.
Does it answer your question?
Yes, sir.
Thank you.
Okay. The second part of your question was on tax write back. So, Pala, if you could repeat the question, Pala can answer that for you.
Hello. Jyoti, could you repeat your question?
Ms. Jyoti Singh, is that, are you done with your questions? As there is no response from the current participant.
Sorry, are those tax write back because of media business? Because as per the result, it seems like acquisition was made to get the tax set off.
So, this is Pala here. Thank you for your question. So, we did cover in the earlier slides, the rationale for the transaction. Why we have now rolled up the media business under HGS, the synergies, the ability to participate in the entire digital initiative and give a better customer experience to the media customers. So that was the primary reason for the transaction. There are always synergies which come out of a transaction on the cost, operational efficiency, etc. So there may be having some tax reversals, but some of the tax reversals have also come in because of the, relating to the healthcare business which we sold off. But the focus for this transaction is to take part in the entire Digital India initiative and also leverage on the customer experience which we bring to the table.
Thank you. Ms. Singh, may we request that you return to the question queue for follow-up questions. We'll take the next question from the line of Ritvik Rai from Star Invest Capital. Please go ahead.
Yes, hi, good evening. A couple of questions. Earlier in the previous quarters, HGS was, there was certain uncertainty to, guide with the future growth outlook. Now, with this integration and with this, acquisition, could you assist us with some guidances in terms of, business growth and future outlook?
So, so I kind of try to answer that. Okay, let's go. Do you have the presentation in front of you?
Yes.
So if you go to slide 17, okay, you'll see that our revenues have grown from last year, half year, from 1,648.4 crores to 2,147.4 crores, right? That's a 30.3% growth in revenues. Okay, a part of it has been accomplished because also, last half year we did not have the diversified business. The diversified business in Australia came in only the second half of the year. But this is the kind of revenue growth that has been clocked by the company in the first half of the year. So when you ask me for growth outlook, we have again tried to answer that in slide 21. Our first half of the year has been quite good, and we are cautiously optimistic for H2. But there is one headwind that I wanted to just highlight to people. The UK public sector, which has been a big part of our growth story last year, we are facing some headwinds there. So these are the two qualifiers that I will have for our growth outlook. The offshore business is going very, very strong, and we are deliberately focused on that business because that is a business that comes in with good margins. Our onshore footprint, even though it is growing, our onshore footprint we have tried to reduce because onshore everybody is working from home. We were stuck with a lot of real estate that we did not need, so we have been getting rid of those real estate to the extent that our leases allow us. And the digital business, if you look at slide 20, that revenue grew by about 63% year on year. So this is the kind of outlook that I will be able to give you.
Fair enough, sir. And the next question would be, which is the company or what kind of company is the management planning to acquire next, and how will Next Digital help overall, with the plan of digitalization?
So the second part of the question, I'll allow Vince to answer. I think we've tried to answer that in the presentations, but he'll reiterate that. The first part of the question, what kind of M&A targets are we looking at? I told you that we are trying to be a digital experience company which is technology-led. If you look at the history of evolution of the DCM business in India, it has primarily been labor-led, right? We were providing people support, either for call center services or for back office services. That's been the history of the evolution of the VPN industry for the last 2 decades. Now we are increasingly bringing in technology. So some of our M&A targets this year are going to be led around increasing our digital capabilities in the data and analytics space, and even in the public sector space, we have looked at some targets. So yeah, that's going to be the focus of our M&As. So that answers the first part of our question. The second part of the question is answered in slide 1 minute. Sorry, just bear with me. I'm just looking through my slides.
Sure, no.
Yeah, in slide 7, you tried to explain the synergies and the opportunity that the digital media business brings in. But if you want Vince to speak through it to elucidate that, over to you, Vince.
Yeah, thanks, Partho. So thank you very much for the question. To add to what Partho just mentioned, if you look at the kind of digital space that we're in, there's a tremendous amount of data required, a tremendous amount of analytics, and all of it's kind of boiling down to a very strong digital customer experience. So when you look at, for example, One Digital, which is a convergence product, and I'll just take one example so that will give you a sense. Imagine rolling out public Wi-Fi where you need to build a database of connectivity, usage patterns, customer experience, customer usage patterns, keeping on changing your package. You need a very strong digital customer experience backend to be able to support it, as well as a entire life cycle management. The same thing applies in the case of Next Sky-Fi, which is the broadband over satellite. People in multiple places using different kind of connectivity. It is not all not all B2C. It's also B2B2C, which therefore makes the process, the back-end process, and the CX process even more challenging, which then gets facilitated, obviously, by the expertise, significant expertise of HGS to be able to support that growth and in those verticals. I hope that answers your question, sir.
Yes, it definitely does. Thank you.
Thank you.
I'll come back in the queue.
Sure.
Thank you. The next question is from the line of Ridham Desai from M Square Capital. Please go ahead.
Good evening, and thank you for taking my question. So I was just going through the balance sheet of Analysts Digital. I think they announced the results in October. And if I look at the balance sheet, the debt part is around 800 crore, both short-term and long-term. And in the presentation that shows consolidated figures, it's around 639 crores. So just wanted to understand how the debt part has been treated in the consolidated balance sheet.
Yeah. Hi. Thank you, Ridham. Can you hear me?
Yes, yes.
Okay. So just to clarify, the debt, what we have acquired from in the process is not the company Next Digital Limited. We have only acquired the business, the media business, the digital media business of Next Digital Limited, right? So Next Digital Limited as an entity remains. They have some real estate, etc. So those assets remain with this. Rest of the business has moved on to HGS, right? And so it's difficult to do a strict comparison between the two because it's not a like-to-like case where you're just adding two balance sheets together.
Right. So you just said that you have just acquired the business part of it, digital and media business.
Business with some associated debt. I'm saying we have acquired business assets, some debt, but the number which is reported is the net number taking into account the BPM business and the media business. So all I'm saying is it's difficult to add just that balance sheet and this balance sheet together, right? And there will be some eliminations because now NDL media business is part of HGS.
Understood. Second question was on the overall performance now. Though the NXT Digital is EBITDA positive, you see, but the net there is a net loss which has been witnessed in the last few quarters. So now just wanted to understand what kind of strategy is in place to convert this loss at the net level into the profit over the next few quarters.
So if you see the current business, we at a overall level we are PBT positive if you take the 200.3 crores, right? So that's the PBT which we have achieved in the first half, and even if you take for the quarter, we are profitable at the overall level, the PBT level. So clearly we will look for synergies as well as growth in customers with a better customer experience. So that's what we are focusing on for as we go through going forward.
Right, sir. And sir, last question on the overall the discontinued operations. So last year also we had PAT at around 240 crore. This year also around 50 crore of PAT from the discontinued operations. So any particular rationale behind discontinuing the operations which are actually profit making? Healthcare was a profit making company, profit making vertical for you. What was the rationale behind discontinuing such operations?
So this goes back to
unfortunately, we realized that the public markets in India were not valuing the business appropriately, even though it was very, very profitable, right? So the valuation of the business was very poor compared to what kind of valuation that business would attract in the hand of a private investor. So I think the difference was so stark, and everybody has seen how stark the difference was. So that was one of the primary reasons that we believed that to unlock value for HGS shareholders, which unfortunately the public markets in India are unable to value the business at an appropriate level. We are better off by divesting the business and unlocking the value for the shareholders in a different kind of a way.
Fine.
Last question, sir, on the broadband over satellite part that NXT is planning to launch. So we just wanted to understand, will this be in direct competition with Jio Fiber and Airtel, who have already presence in this metro markets?
Right. So,
This is over to you.
yeah, thank you for that question. We are the only provider who has launched on geostationary satellite. The only other player who is currently in the space and prior to this was Hughes Telecom. As far as we are concerned, our model is different and we are on geostationary satellite. We will see a lot of entrants coming up. There is no question of that. India is a very big market, and given the kind of terrain, we see tremendous amount of use cases both at the retail and enterprise level. But the good thing is that we are off the blocks already. We launched on Diwali in Tawang. We launched after that a few weeks later in Pulwama with our partner Tata Study and Jadus. We've just signed on our commercial customer already, which is a solar farm in Ahmednagar. So our focus is on continuing to grow, and we have one big strength, which Partho also mentioned, and that's very critical. One of the important things for broadband over satellite is to have a significant national footprint. Considering we have a presence in 4,500 pin codes and over 10,000 feet on street, there is a sales to supply to service chain already there. So for us, we've hit the ground running, and we're looking at leveraging that for growth going forward. I hope that answers your question, sir.
Yes, absolutely. Thank you. I'll join the queue.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Imran Contractor from Quantum Investments. Please go ahead.
Hello. Yeah, good evening. Can you elucidate more on what is the timelines for getting the accounts audited for the last March and announcing a buyback and the board meeting, and what would be the timeline are you looking at?
So, hi.
I want to take that question.
Yeah. Hi, this is Bala here. So just to clarify, the audit is for 30th September, and that should be done fairly quickly.
Okay. No, because we announced the buyback last February, I presume. It's still about 8-9 months have gone past. And second thing, this next digital business which we have brought in, when is it likely to turn profitable on a bottom line basis?
Pala here, I think there is a bit of misunderstanding. So let me just clarify that in terms of the buyback. See, the healthcare business was sold in the month of January, and if we had done the buyback based on the earlier balance sheet, the buyback amount would have been significantly lower, because...
No, I understand that. We need to get the audited account.
No, let me just complete. So, as per SEBI guidelines, once you are doing a capital restructuring through a demerger, etc., that you cannot do any buyback. So what we have indicated is the amount which have been earmarked based on the 31st March balance sheet and the estimated balance sheet of 30th September. So as I said, now that the shares have been issued, the buyback and the listing is expected to be shortly. We will pick up the proposal for consideration of the board after this.
Okay.
Yeah. So that's why I just wanted to clarify. Sorry.
Next digital business per se will become profit accretive. What is the timeline are we looking at? Or it will require continuous investments?
So that business is already EBITDA positive, and there are costs arising out of interest with the stronger balance sheet. We'll be able to negotiate, get better terms on things like interest, vendor payments, etc. But it's a business which requires more and more set-top boxes for growth. So that's where it has an impact on depreciation. But at the overall level, we are confident, and as you can see, even at a PBT level, the combined businesses are profitable.
Okay. Thank you.
Thank you. The next question is from the line of Preeti Sharma from Invest First Advisors. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, my question was regarding the cash position that we have. So I was going through the presentation. We have around more than 2,300 crore cash on our books. So could you please let us know what would be the plans with this cash? Like, would it be used for next digital business or is it used for something else? Could you please elaborate on that?
So, today we have, if you look at our slide 26, we have surplus fund in the form of loans, cash, as well as debt investments. So these will be used primarily in broadly 2 to 3 buckets. One is, of course, the buyback and the taxes payable on the buyback. Second part would be in terms of any acquisitions which we may make. Partha talked about it in the digital space, automation, those kind of services, technology-led services. So so that's one potential use. And third, of course, is to grow the business both on the BPM side as well as on the digital media side.
Okay, got it. That was the only question. Thank you so much and all the best.
You're welcome.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Srinivas Palakodeti for closing comments.
Hello everyone. Thank you for taking time out for participating in the first time investor call of HGS, including the media business. Thank you for taking time out and for very interesting questions. We look forward to interacting with you when we come up with our results for quarter ended June of 22 in the month of February. Thank you once again.
Thank you, everyone.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Hinduja Global Solutions Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.